Today, Wall Street isn't just watching the market is watching the Federal Reserve. One announcement, one press conference, one sentence, it can send markets soaring or tumbling in a matter of minutes. But here's the real question. Should today's headlines change your financial future? Today, we're separating emotion from education, noise from knowledge, and speculation from strategy, because while millions of investors are focused on the next 30 minutes, the greatest investors often spend more time thinking about the next 30 years. Welcome to Wall Street Wednesday, folks. Good morning, ladies and gentlemen. Welcome back to Wall Street Wednesday, where we simplify Wall Street so Main Street can make better informed financial decisions. I'm your host, Donald Johns. This is the Unbearably Bullish Podcast, the official podcast of the Bull You Can't Bear. This is the movement, strong markets, stronger mindset, unlimited opportunity. Now, let's ring today's opening bell. Today is Fed Rate Day. 8 times each year, the Federal Reserve meets to evaluate the health of the U.S. economy and decide whether to adjust its target for short-term interest rates. Millions of investors, businesses, economists, and financial professionals from around the world pay attention to these meetings, not because the decision predicts the future, but because it offers insight into how the Federal Reserve views inflation, employment, and economic conditions. Today's schedule has 2 key moments. At 2 p.m. Eastern, the Federal Reserve will release its policy statement and interest rate decision. At 2:30 p.m. Eastern, the Federal Reserve Chair holds a press conference to explain the decision and answer questions from the financial press. Here's what many new investors don't realize. Sometimes the market reacts more to what is said than to the rate decision itself. Investors listen for changes in tone, new economic assessments, and clues about future policy. That's why you'll often hear the phrase, don't just watch the decision, listen to the message. Why does this matter to you? Because interest rate policy can influence borrowing costs throughout the economy. Mortgage rates, business loans, auto financing, credit cards, corporate investment, consumer spending, investor sentiment. While the Federal Reserve doesn't set all of these rates directly, its policy decisions can influence financial conditions across the economy. But here's today's biggest lesson. Today's announcement may dominate today's headlines. Your long-term financial goals should last much longer than today's news cycle. It's been another busy week for investors. Markets are also digesting major corporate earnings, artificial intelligence developments, economic growth data, labor market updates, energy prices, global geopolitical developments. Every week brings new information. Successful investors, they learn how to process information without allowing every headline to dictate every decision. Here's what's on the radar this week. We have Federal Reserve communications, major earnings reports, GDP updates, inflation data, labor market reports. Remember, markets don't react to good or bad news. They react to expectations versus reality. That's an important distinction. Today's myth, I need to perfectly time the market. Reality, no one consistently predicts every market move. Markets process enormous amounts of information every day. Rather than chasing perfect timing, many long-term investors focus on discipline, diversification, and consistency. Let's talk about the power of time. Imagine 2 friends graduating from college. Both want to build wealth. Both have similar incomes. Both believe in investing. But there's one difference. One waits 5 years because they're convinced they'll eventually find the perfect time to invest. The other begins immediately with disciplined long-term approach. Neither knows what the market will do next month. Neither has a crystal ball. I know we all want one, but we don't have one. But one gave time a 5-year head start. That is powerful. Time is one of the few advantages every investor has access to. Compounding, it doesn't make headlines. It works quietly, patiently, year after year. And that's often where long-term wealth is built. The lesson isn't just for professional investors. It's for the young professional starting a retirement account, the entrepreneur building a business, the parents saving for college, the retiree managing a lifetime of savings. Different goals, different circumstances, one common lesson: time and discipline can be valuable allies. Let's do the bull versus bear. The bull says, stay focused, follow your plan. The bear growls, wait until everything feels safe. Here's the challenge. Markets rarely feel completely comfortable, folks. There will always be uncertainty. The key, it isn't eliminating uncertainty. The key, it's making thoughtful decisions that align with your goals, time horizon, and tolerance for risk. Let's do today's future focus spotlight. Artificial intelligence infrastructure. AI isn't just about chatbots, folks. It's data centers, power generation, networking, semiconductors, cloud computing, cooling systems, cybersecurity. Understanding emerging technologies doesn't mean you need to invest in them. It means you're becoming a more informed investor. Knowledge should always come before action, folks. Let's do the bull market fact. Did you know some of the market's strongest single-day gains have occurred during periods of heightened volatility? Because no one knows exactly when those days will happen. Many long-term investors emphasize having a disciplined plan rather than trying to predict every short-term move. Let's do this week's bull challenge. Spend 1 hour learning. I always emphasize this. Instead of worrying, read one investing book, watch one educational video, learn one new financial concept. Folks, knowledge compounds just like experience. I'm going on my 25th year in the business. Let's do the bull's bottom line. Wall Street will always have another headline, another prediction, another earnings report, another Federal Reserve meeting, another market rally, another market correction. But the greatest investment will always be the investment you make in yourself, your education, your discipline, your mindset, because the markets may reward capital, but life rewards preparation. And that's exactly what this show is all about, helping you become a more informed investor one Wednesday at a time. If you enjoyed today's episode, please like it, share it, follow us with somebody who wants to better understand the markets, subscribe where you enjoy podcasts. You can visit us at thebullyoucan'tbear.com. Until next Wednesday, always remember, strong markets, stronger mindset, unlimited opportunity, connect, collaborate, let's monetize, baby. Follow the herd, and always remember to stay unbearably bullish and never quit, folks. Don't let anybody put you down. I'm going to do the educational disclosure. The opinions expressed in this podcast are those of the host and are provided for educational and informational purposes only. This podcast does not constitute financial, investment, legal, or tax advice, and nothing discussed should be interpreted as a recommendation to buy, sell, or hold any security or investment strategy. References to current market events, economic conditions, companies, sectors, or Federal Reserve policy are intended solely to explain financial markets and improve financial literacy. All investments involve risk, folks, including the possibility of loss of principal. Past performance does not guarantee future results. Always remember that. Always conduct your own due diligence, consult qualified financial, legal, and tax professionals before making any investment decisions. We love you. Have a wonderful day and enjoy the Fed rate day. Have a good one. Bye-bye.